good.
Don't run with scissors, guys.
Does that look good? Does that look good?
Yeah. That was a good cut. And that was a great
Oh,
cut.
hey. Yeah, you know what? You know what it is?
That was a super cut.
Oh, it was.
There we go. You had your coupon yet. No, it is the first cut is the deepest.
Oh my god.
Except
Okay, now we're
except-
canceled officially.
First of all, today was not a very deep cut.
that's what I'm getting at. Except it's not today because that was not very deep at all. It is the first cut was the cheapest, I guess. I don't know. Come up with some different
Oh,
words.
here we go. We're
Yep.
out. Let's go.
Not singing that. First cut is the cheapest. Hey, that would be a good market promo though for a stylist, right? First cut is the cheapest.
Yeah. It's like,
Mhm.
you don't even have to
I don't
tip.
know.
Come on in.
I don't know. All right. So what are we talking about here, guys? We're talking about cuts. I need to introduce us all first, though. I'm Darin with Arbitrage Trade, and this is After the Bell. It is on a Wednesday, as we always should do. And my guests are Daniel Hopwood, the top right corner. He is the ex-institutional wealth manager. We also have down at the bottom left, JPM, named after that banker. No, not really, but he actually just happens to have that same name. And we have Royce Quanticus Massicus in the bottom right, looking very nice with his beard. And very esteemed, yes.
Yeah.
And he's been busy.
That,
Even
that did me well. I mean, that looks
Recently
like
trimmed.
he's been very busy. It's been very a lot of things going on, but he still looks nice and refreshed today. And I am not a brown noser. Here we go. This is
your nose is definitely not brown. I can verify that.
No, it's actually
Not
red.
brown.
By the way, update: my allergies are still there, and yuck. All right, but you see me
He's
doing
also
this.
an overshare, but we still love him.
I know, because I have nothing to hide at all. In fact, let me prove.
No.
Okay.
Keep going.
And now a word from our sponsors.
Please no.
What'd you say, director? I can't do that. What? No. Okay. All right. Wrong channel. That's Thursday nights. Okay. Gotcha. All right. Here we go.
Yes,
Disclosure.
I can't even
Thirsty
get it out.
Thursdays.
Yes, Thursday
There you
Thursday with Darin.
If they're thirsty, you must
Darren
give them
needs a
drink.
drink.
And then
Tickle.
deep dive with Daniels.
If they are thirsty, you must give them drink. You must satiate. All right. Let's move on. Disclosure. I got to get some disclosures here, especially because of
No,
what we
keep
just
your
said.
closures exactly where they are.
Can I diss these closures?
We are not financial advisors, nor are we comedians.
No. No, we've been trained on neither. No, we are not financial advisors, and this is not financial advice. This information provided is surely for educational purposes
Surely.
and entertainment purposes.
Don't
Don't
call
call
you
me
Shirley.
Shirley. I will wait for it. Please always consult an investment professional before making any financial decisions about rate cuts and the what happens after that and all that good stuff. So
Rate cuts.
yes, which we will talk about. It's not advice. We're just giving entertainment and opinions.
Are you not entertained? Are you not
I
entertained?
hope so. I hope
Yeah,
so.
you got to get to it.
So let me run down like I usually do the numbers, the numbers which every week they decide is one number is more important than the other just to satisfy whatever they're trying to get done that week. So anyway, this week the Fed did cut 0.25. Dow Jones is today ended up plus 0.5%. S&P was basically flat at plus 0.1 at 6,600. That seems to be the new threshold. NASDAQ is down a quarter of a point or a third of a point. The dollar is at 96.67, which is up. WTI crude is a little down at 64.05. Gold is at 36.94, which is a little bit down. 10-year is up. In fact, all the bond yields are up. 10-year, which is the one they used to put a focus on, that's what I was going to talk about, went down below 4, but then it jumped back up to 4.08, which is a plus 1.49 and rising. 30-year is at 4.67, which is up 0.67%. And my point is that they were talking about how the 10-year was the focus. Now they're trying to change that agenda, if you will, to say, no, now it's the 30-year we're looking at. Whatever. It's just whatever they feel. It makes no sense.
Someone
Looking at
give him a banana. He's angry.
they're looking at the longer bond yields now instead of the short ones. It's like, no, don't look at the short term now anymore. And by the way, Bitcoin is down to 115.5. I think that's all I got there. Besides just saying in general, all the bond yields are up. did you want to add anything to that, Daniel, to those stats, and maybe maybe an idea of why bond yields all went up?
Yeah, I mean, I think it was probably just like a confirmation of the rate cut happening, right? So they're pricing in where they thought it was going to be. They know now. So now they're working on potentially trying to price in where they think things will go next. Yes, exactly. You know, Powell finally did his 25 basis point cut. But, you know, like you were saying earlier, Darin, before the conversation, is the next 2 days are really the tell of how the market will react to these cuts. They were down on the cut, a little over 0.5%, and then all of that was bought back and, you know, practically flat on the day.
Right. I was saying that that's probably automatic algo reactions, and then we'll see what people reactions are after that. So, and then we roll right into whatever the options were set for Friday, and so then really I'm just saying Monday might be when we get our first real reaction. Who knows? Monday, Tuesday. We don't know. There could be something else come up. But Royce, what's your opinion on those facts and figures and those numbers that were just brought up?
I definitely thought they were going to cut the rates. They did cut the rates. I wanted them to cut them just a little bit more, but they're trying to basically ease people into what's happening with the dollar, with economic policy, domestic policy, the tariffs. Everything, I think, is going exactly according to plan, and I think they know that, and so they're just saying, hey, give the market what it expects, and because they did give the market what it expected, it responded positively and ended up just a little bit up for today.
Josh, Mr. Banker?
No, I just think, I mean, you kind of, market reaction was kind of expected. You had still some dissenting opinions that thought that maybe they weren't going to get a cut at all, even though, you look at like Polymarket and it was priced in at almost 100%. But then you also had the other half that was thinking maybe we get that 50 basis point cut. And I just think kind of, that's why you saw the dip and then the reaction. And then, we kind of ended flat on the day because realistically, everybody knew it was a quarter point and that was all priced in.
Yeah, pretty much. I still say that there is, and I forget who they always bring on CNBC as the expert. I heard a little bit of what he had to say afterwards. His last name, Lick? Something Lick? I don't know. I'd have to, I forget his name. But anyway, they always bring him on as the expert. They only bring him usually once a month, and that's whenever these things come up. But he said there's still reason to fear inflation, and that we've also looked at other things that have happened, which is the wages for the top third have gone up, while the wages for the bottom 70% have gone down or flat. So again, wealth gap expanding even more so. His concern also was that of all of the money which we talked about last week, we beat him to the punch. All the money that's out there is still to be spent, and that these bond yields are reacting to the fact that there's still a lot of money in these programs that's going to possibly create more inflation. So it's just a battle between the two, and so you're absolutely not wrong about saying another bull market. I guess the only Royce, but the only thing is you didn't say how long, and that's what I guess that's the next question is okay, we got another bull market. Is it going to stop sooner or later? And you can answer all that later, but unless you want to jump in here, I feel like
I will say this: you would have to be a fool to try to predict when it's going to stop or start.
Right.
At Arbitrage, we just ride the ride, and then when the writing's on the wall, that's when we take our exit.
Yep. Well, we have a cheat code almost. We have the algorithms we have, and not everybody has that. So we really don't care.
Arbitragetrade.com. Absolutely.
And yeah, you can definitely start there to inquire about what we do here in those charts. But it's crazy, like you said, for anyone to think otherwise and try to go by what the media says. That's why we like to be part of the media in our little way here, but we don't like to listen to apes.
Only the apes. I just want to say only the apes.
I have a left ear for one and a right ear.
Our name, us quants and institutional investors, we know better.
Hey, you know what? What's that saying that you've got to keep your friends close and your enemies closer? That's all it is, Royce. Is
are you a friend of me now? Are you a friend of me?
A friend of me? A friend of me or a friend of me? Which is it?
The latter.
Yes. All right. Let's go ahead because I think this is related to it, and it is a lag report, basically, so to speak. But the University of Michigan Consumer Sentiment Index, which we all know how we all feel, so there's no need to spend 5 minutes now saying how it's a survey, because you all know what the rest of that is. So go ahead, Daniel, and tell us what this, because I already know, but I'm going to let you tell us what that survey said.
Yeah, so the University of Michigan Consumer Sentiment Index, so kind of just gauges on like how people feel about, the economy and spending and whatnot. And so it fell 3 points for the second month in a row when they were expecting a rise. So it wasn't so much that there was a significant change in the number. It was the fact that it was starting to trend in a direction that they were not expecting, right? And so, this isn't necessarily a canary in the coal mine or anything, but it's kind of, you hear all this stuff about the economy's fine and everyone's doing great, but, it's kind of starting to show on people's face, or in, this case, a survey, that things are, not quite what they maybe seem to be. And there are some interesting numbers that came out earlier this week that the top 10% of earners are responsible for 49% of the consumer spending in Q2. So that means half of the economy is, kind of more or less like riding on the top 10%. And so if, that means the other 90%, like, if they're not spending as much, like, they're experiencing, slower hiring rates. Inflation is probably much more, harsh on them because, another stat is like the top 10% own like 80-90% of like the stock market, right? So it's, kind of the K-shaped recovery, what they call it is, it's doing well for the people who are already doing well and not doing well for the people who aren't.
I would like to say this. I'm going to get up on a soapbox for just 1 minute.
Keep your head
on that box.
Only about 1/3 of the American population votes. And that's reflected in the economy. If 49% of all the spending is happening from only 10% of the market, that means that's 1/3 of the people who are actually voting. So if you guys want to see change, go sign up, go vote.
Absolutely, 100%. Hey, we're 2 months away from November. Good job.
Yep. Yeah. Hey. Stand up and be counted. Otherwise, those percentages look really good for the wrong people.
Yeah, that's true. That's true. But I hate to toot our own horn, but I know that I have said over and over again that the elite are the one that are keeping this economy up, and that the wealth. I keep saying the wealth gap is widening, and finally they're releasing those stats that are proving that. But it was all before. You know where I'm going to say, it's all been there right in the Fed reports.
Yeah. But my biggest thing is that everyone is always saying, hey, my vote won't count. My vote isn't this. Your vote doesn't count because you don't show up to participate. The same thing is happening in consumer spending. No one's showing up. They're like, hey, we don't have the money. We don't have the thing. We don't have the opportunities. You make the opportunities you make. You have to participate if you want to see change. Yep.
Something's telling me that is the mayor of Memphis dropping out or something? What's going on?
I'm voting for you. Yes. Make the right choice. Vote for not Royce.
Vote for Wells. Vote for your Wells being.
Right. Oh.
You can take that.
Wells.
I'll give you that one. There you go. We could do this all day. No, let's don't. All right.
No, that's bad.
All right. So
you said diversify.
Yeah. Yes. Now
I gotta be joshing you.
Joshing. Oh boy.
What did I do?
I woke him up. Credit delinquencies. We talked about that.
Josh. So I mean, Hey.
Mm-hmm.
Is that going to be your vice presidential elect? There is.
Yes.
Josh? Okay.
I would definitely have Josh as my running mate. Truth be
told.
told.
Yeah, absolutely. Yeah.
There we go. Kind of counter each other some, and there we go.
Oh yeah. We would win.
Reach out to one part of America, you reach out to the other part of America. It's perfect. You get all.
We would win in a landslide.
Oh yeah,
That's
for
right.
sure. Quite literally.
Depends on the voting machines. All right, that's a whole other thing. Let's
Economy goes breathing.
Yep. Anyway, now you'll do what Trump's already done, which is get all of his cronies on his staff and then make all the.
Hey, you're one of those, Darin.
Wait a minute.
I never said I'm a crony of his. Never.
We'll be back.
No.
Once again, after
Crony
these
crony
short
of Royce's.
Oh, Royce's, yes, absolutely, 100%. All right. The last thing on this before we move on. All right, it is time for Josh's first chart. Let's all give him a hand. His first chart. Yay!
All right.
Working finally.
Go for it.
Okay, so let's go back to this is showing it's kind of a time lapse over the last 50 years of consumer sentiment. And if you look at this, every time, I don't know if you can see this, but we're starting at 1980. Each gray bar here represents a recession. And every time we dip more than, say, 10 to 15% in consumer sentiment, we are in a recession. And I know recessions are often declared, after the fact. So you could get that kind of double whammy of, is the recession the, precursor, or is it the leader? I mean, or is it, the reaction to the consumer sentiment? But every time we have a dip more than like 10 to 15%, we are in or are experiencing a recession. And that has historically happened every single time. You look at 2020, which is this little blip right here, and then all of that seems to disappear. You look at how far we have fallen. This would be roughly 2022, which you remember, when consumer sentiment went back up, everybody was feeling great. And then 2022 rolls around and we realize that we're back in sticky inflation and, prices are skyrocketing and not coming down. And then consumer sentiment continues to topple. Then we get a little bit joyous and then we're right back where we are. What I don't see are any gray bars down here. So, and I know that you think about it is the National Economic Reporting Bureau is the only entity that actually declares a recession. And I don't know the fact that they haven't done it or if they can backtrack that far, but how are we not currently in a recession? Or how have we not experienced a recession? Or how are we completely avoiding this entire situation? And going back to kind of, and this is again why this is more of a stream of consciousness. Just I was really surprised at what that data was showing me. And kind of back to your point, like, are we dealing with almost two different economies? Like, is it the top 10, top 20% of earners that are literally propping the entire economy up? Is it because of, the investments into the businesses and the AI boom that are actually like propping all of this up? Or if that's not the case, then are we due for a recession? Like, or are we just leading up into one? Maybe some of these data points, where we get the ebbs and flows of these data points, are leading us into a recession in 2025, 2026. The one thing that really broke my brain, though, is that, obviously, I've been perma-bear for a good bit of this year, and for good reason.
How dare you?
Look at this. Every single
perma-bear I know.
Every single time this current level at 55.4 is a freaking inflection point. So does that mean that I am looking at all of this all wrong, or are there literally the two different economies and we are about to get off that inflection point? And what, Royce and Daniel have been saying, that maybe there is an opportunity that we can continue to run all of this economy that hot and continue this bull and just keep this bull streak going, while the consumer sentiment, which I'm assuming is being pulled down by the, second lower economy, the, middle class is disappearing, lower class is being squeezed out, upper class is thriving. Are we, it was one of those few things that I've seen in a long time that really just gave me pause. And I was really just wondering, what are we actually doing here? Where are we actually going? And it just introduced way more questions than I have answers to. And so I'm going to jump off my soapbox and hand it back over to you guys.
Okay.
Yeah, it's a
So
Band-Aid.
I'm going to say what I like to say, and Caroline will probably be very, very happy. We're going to introduce multivariable calculus.
Jeez.
So,
Okay.
but in everything that basically they teach you in finance, they don't teach you in finance. Previously, if you look at recessions, anytime you want an actual recession, you see everyone flock to the dollar. Well, this time it's different. They're not flocking to the dollar, they're flocking to gold, which is also still versus the dollar. So because nothing is going basically to hurt the dollar, it's still inflating, which still makes it looks like the market is still going up. If that sentiment were to change, then I think we would see the recession that you were talking about. But as the BRICS countries basically invest heavier and heavier into gold, we're watching basically the economy and monetary policy switch from an inflationary backed global economy to a deflationary backed global economy, where basically they're still backing everything by gold, and then they're backing that gold by the cryptocurrencies and ETFs and everything else but the dollar. So what we would normally expect, that 10% that's holding up the market, they are investing in these alternatives, while the common layman or the blue collars don't have the financial sophistication to know how to get into those markets. But basically, as it's adopted, these early adopters will set the pace, and then the middle class and the lower class will realize what's going on and realize that, hey, AI is just not a search tool. AI is not this. It's actually allowing for new infrastructure growth. It's allowing for all of these things to expand. And consequently, that's why only the people in the know are currently making money.
And only the people in the know have the money to invest, because even those that are in the bottom 2/3 don't have the money to invest anymore. They're having to put it towards bills. I mean, it's interesting to see what will happen here in the next, let's just say, first of all, the next 2 weeks as we get out of September, because that's when all those notes had to have been renegotiated, et cetera, for all these companies. And then what happens here up until, we'll say, right after Christmas, and see what happens at the beginning of the year. But because, oh, by the way, TikTok, they had renegotiated that. They aren't making a decision on that until December 16th now. Everything's getting pushed down the road, everything.
And what happened to all those real estate leases for all those people who are working from home and all those buildings that then 2025 was supposed to be the year that all of this came tumbling down for the commercial real estate? What happened to that?
Yep. I still say it did happen. Something did happen in China. I just want to see where that contagion finally spreads across. We'll see. I don't know. I mean, I don't think anybody's being honest with us in the economy world right now. If you
I want to add a fun fact to Royce's point. And Josh, I'll just say real quick, I don't have a good answer. I have like a million theories for you, but none of them are like concrete enough to like give you
that was my problem too.
And so I was doing some research so that I had some things for Darin and I to talk about for our blog, like a lot of macro stuff. And one of the things I came across was like, talking about like world reserve currencies, how they happen, how long they last and whatnot. Do you know how long the average like dominant currency lasts? Like, so like how long, like when the UK had it, before them, the Dutch had it, that kind of thing, like how long the average like reserve currency lasts?
No, how long?
35 years.
Oh, wow.
Oh,
Do you know how long and obviously it depends on the dates you pick, but I went based off what I was watching, that kind of like post Bretton Woods exit date to now, how long we've been the world's reserve currency?
At least
70 years.
We're almost double. It's like 57 years we're currently at.
Oh, wow.
So like it's like in this just kind of adds to Josh's point of like and also what Royce was saying. It's like we are depending on what you believe or not, like whether there's a full changing of the guard or America's just slowly losing its reserve status, and like we're not in unprecedented territory if you looked at history, right? But like for kind of the modern market, the way the world's worked for the last 100 years, it's like we haven't really had like this big of a change in things. So it's kind of like it makes sense that when Josh brings that up, I'm like, well, I can talk about 6 different other things that are related to that don't make sense. But like, I don't have an answer.
Absolutely.
Like we need Ray Dalio over here.
The numbers and surveys don't math. That's for sure. It's crazy, and interesting at the same time. That's crazy though about the historical purpose about that. I feel like maybe that's why Congress and administrations, these last 2, have been going crazy trying to find a way to force America for that to not happen. And they're probably fearful of China doing something because of the they were way ahead in all these different programs. And so that's when we started just cutting them off and saying, now we're going to be the center of this AI movement, not you guys, because maybe that was going to lead to the dollar not being dominant anymore. Who knows? I mean, I'm not an economist, but it does seem like there's been some desperation in the last couple of administrations to change what the world's doing right now.
Darin, can you guess the 2 ways that a currency regime changes? They're not happy answers, by the way.
No.
The 2 way that happens.
That like the world reserve currency changes from one to another.
Yeah, I would say wars. Something in war, maybe.
War is one. What's the other big one?
You put me on the spot here.
I mean, everyone else can answer too. Yeah, you can phone a friend.
A forced regime change.
Yeah, but that kind of like falls like under like war, because that could be like civil war as well.
Yeah, sort of.
There are 2 ways to get out of a recession: go
disease?
to war, or have a big major economic upheaval or new breakthrough. The Industrial Revolution.
The other one is like hyperinflation, debasement of currency.
Right.
Things have to be reset.
We don't want Armageddon.
No one trusts it. Go somewhere else. Well, I think war is a bit more Armageddon. You know, like wouldn't it be great if we had like 1900 German level hyperinflation, but like World War III is a lot worse. I think you could say.
Why would you want German level hyperinflation?
Yeah,
that's how currencies blow out. No, I'm not saying I want.
I'm like, hold on.
I'm saying,
how many Satoshi do you own? How many Satoshi?
Not enough for that. And I'm not saying I want that. What I'm saying is that would be better than World War III.
I see a path, Daniel. I see a path to that. With all this money that we've pulled out of future generations and throwing it into this economy right now to push this data center AI thing in America. And I can see
America.
I have asked Royce to stop putting money into what's my Social Security thing, but he keeps saying it's illegal and he has to pay it.
Absolutely.
Even though I'm never going to see a dime from that thing.
No,
I see a way that we could hyperinflation could happen. I mean, I'm sure
going to take Josh's.
Stop it, but
I was going to say I might be the last one. Like,
I don't think you're getting any either, bud.
Yeah,
I don't think any of us are seeing that money.
Got what, like
maybe Darin.
Darin has a good chance. He has a good chance.
Yeah, Darin has a good chance.
We got old jokes on after the bell even.
Hey. We're gonna be hoping Darin adopts all.
I hope I scrape all of the last from you guys. It just
come on, it's only like 3 years away, right? Only like 3 years.
Darin, you'll be laughing all the way to the bank.
No, they're changing it. They're changing it. I think they're going to change it from 67 to who knows 75.
You're going to be working like a dog till you're 90.
Like all the countries did. I know. I'll be on here saying after the bell.
It's brought to you by the letter K.
Brought to you by the pins. Excuse me, I gotta go to the bathroom. Okay, I'm done. All right, so let's move on. It's speaking of inflated things, Oracle is on fire. A lot of companies are going on fire. A lot of these companies are just getting richer and richer. And why is that? Daniel, why are these companies getting richer? Just because of the whole AI agenda? Is that why?
Yeah, I mean, pretty much they had this big cloud deal with OpenAI that made them skyrocket and close that day 36% up. And it was over a few years, it should bring in $455 billion to Oracle. And I thought that was really interesting because someone broke down the math of that. OpenAI doesn't make enough money to pay them on any given year, all the money they'll owe them for the data center compute. So they're, either plan on getting money from somewhere with lower rates or really hoping that AI spend picks up. But I actually, I forgot to put it in here, but I wanted to get Royce's opinion that I saw a few different things on Twitter and Substack that AMD is behind a lot of the Oracle inferences, and that's the sleeper play, not NVIDIA.
That is absolutely correct. I'm not sure if you guys watched the seminar from last Sunday. I even called that out. So I think the last 15 or 20 minutes, I started talking about all of the AI data center plays that are in there, and there's quite a list. We're going to go to crayons. I'll show you the list just to show you a few of the other players that you might not expect to be in that list of data center callouts.
So do you think he gets to lead the TikTok takeover and run it all on Oracle cloud servers, and then he'll be do you think they'll include Oracle in the Mag 7? Are they going to knock out someone else?
I can neither confirm nor deny or talk anything about that at this point.
Also, sorry, this is ADHD, but like speaking of old people, dude, Larry Ellison's like 81. It's insane.
Okay. What does that have to do with anything?
I guess like go look at a picture of him. You're not gonna guess that he'd be 81.
Speaking of old people,
man.
Go ahead.
Darin over here just catching strays.
No, all these portfolios, okay, of all these companies who were way down, magically all of a sudden now are way up. Oracle is one of those that almost every portfolio had a piece of. So they had to come up with something. And Oracle now is Microsoft. Poop! All of these different ones are now, all these that were in every single one. It's like all these managers said, we got to get together. We got to do something because our portfolios are down. Now let's get all of these companies involved, even ones that you didn't even think of, and ride all the boats. Rise,
are you still going to let him be an ape? I mean, he's gone super ape.
I was just about to say, I think Darin needs Jesus.
I now identify as an ape adjacent.
Hey, I got it. I got it.
That's like saying, Taiwan was behind NVIDIA. They got into cahoots. I'm like, no, they just created all the chips.
By the way, NVIDIA, there was news today about NVIDIA about that China's going to just totally shut out NVIDIA now. So we'll see what happens.
Good.
Which AMD? You said AMD. You said AMD now, right? No, I'm okay with that.
Like to Daniel's point, like there has to be something else going on with Oracle, because that pop that they had did not make. I mean, the rise. What it was like, they were like 30% up on the day.
It was 42 at the peak. It was that gap,
and all of this was tied to one customer. Like that is an extreme.
OpenAI, but yeah, that's their main customer. Their biggest customer now.
That's an extreme concentration risk for a company that's been struggling to, I mean, I know they've held their head above water, but they haven't exactly broken out.
Have you heard of Project Stargate?
2000.
I've heard it, but please inform us what it is.
I've heard that I'll let you go read on your own. I've already said too much.
Project what?
It's public knowledge then, evidently.
Yep, it is public knowledge. But yes, that's what I think is driving most of this.
Okay. In fact, I put that on my 3 things.
We'll see you back on after the bell.
Right. I put that on my 3 things for tomorrow about what was I going to say?
He's getting forgetful. He forgot which room he's in again.
Wait. It says Project Stargate. It's about remote viewing.
He can't talk, Daniel. Stop poking the bear.
Yeah, just
Darin, do you know what remote viewing is?
I'm kind of doing. You're doing it right now.
Just go to the next topic.
So Stargate LLC. That's as much as I can give you at this point.
Okay. I know about that one.
Okay. All right. But my point is Oracle's with TikTok. TikTok, I mentioned in my 3 things. 3 things talks about, I'm wondering there's got to be something else as to why they pushed this date forward to December 16th, and that maybe there's something still being worked on. That's all I'm going to say, because I've already recorded that. And now we're talking about, is there something else behind Oracle right now? So
There
anyway.
is something huge.
Yeah.
Huge.
Yes. There we go.
That's what
All right,
she said.
Let's keep moving.
That's what she said.
Yeah, let's keep moving.
I want to move it.
Now, you know this, I can't stand this stock. So go ahead and tell me about Hood there, Daniel.
Oh, I'm loving Hood.
You know, they stole Royce's original idea that he had for Arbitrage, which was creating a social platform for stock trading.
They're listening.
So they are now going to be posting, like, or I guess I should say, I think other users will have the chance to like post their trades live. You can follow other traders. You'll have like a messaging feature, almost like an APE Bloomberg terminal, if you will.
That's what StockTwits was. StockTwits did that before. That's where I got involved.
StockTwits and not the same.
But you know, now this is with real money, Darin, and apparently they're also going to have like public figure portfolios that you can track, like Nancy Pelosi, the best trader of all time.
They really did steal exactly my idea.
Zuckerberg.
All right.
So I think it'll be interesting to see if this helps Darin make more money, or if this is just gonna.
Oh no, he's gonna get into shouting matches with other apes.
They're gonna ban his account.
No, I will only listen to this group here and only watch the charts that we have here now. That was the past. I have been changed, but I'm still an ape.
It's like the one thing I don't get is like what the value add is there.
Get people to trade more.
But I think it'll also it's a way that investment houses can watch retail. That's what it is, and act before they do, and all this stuff.
They already
there's
all kinds of different investment related platforms.
They took over Reddit. You saw that.
But now Hood is having to absorb all of the costs and liability that are associated with it, with, in my opinion, little of the benefit. Like I don't understand.
There's no more liability. There's no more liability.
I think
the regulators don't regulate anymore.
No, I mean
the benefit.
Like with a chat platform, there is a huge amount of regulation and liability there.
But they don't regulate anymore. Now they might for retail. If they get retail, they'll slam retail into the ground, but they won't regulate, most investors. We have a passive. This is straight from the mouth.
That they have done the math and figure that if they can, create more or less an addictive product that they can get more people on there talking about things to trade more, they get to make more money, right? And so I'm sure at this point they have real good lawyers for any mishaps that are going to come up. I
certainly hope so.
I mean, they got the lawyers to get them out of that other crap when they stopped the buy button. I mean, obviously what's his name? Tenev? Is he still there? That guy, Tenev? Vlad Tenev, or whatever his name was, the one that was came on and just basically looked like a fool in front of Congress, but he got a free pass. Anyway, see if he stops more buy buttons.
In the terms, they do have the right to do that, but
yeah. Okay, we're not going to dig into that. Could be a whole nother show. Let's go.
I'm not saying it's right. It's like the South Park Human Centipede episode.
Gross.
All right, so this last thing here.
Conditions.
I mean, imagine the Weeble terms that Darin has signed.
Why won't it read?
All right, this is the last thing in our agenda here is, and this is something that I have said too before, is that these companies, when they don't want to give forward guidance, more and more are not doing that. And so now you're suggesting, Daniel, that we just won't have quarterly
I'm
earnings.
not suggesting anything, to be clear.
See how he threw you there?
So instead of quarterly, it's going to be bi-yearly, biannually. Is that what you're suggesting here? Or are you reporting here? You're reporting here. Because I had been saying that these guys, if they don't, that's what they do on their earnings.
Darin, first of all, Trump and I look nothing alike. Okay, so
You're around the dollar junior though.
So we already have a 90-day window before what companies do until we know what they did. So now we're going to have, instead of every 30 days having, or instead of every quarter, which is 3 months, have earnings. They want to go to twice a year so that they can hide more stuff between this time and this time. I mean, what's going on? What is this? Explain it to me, please.
Okay. All right. Well, I'm not going to
All red.
sit here and justify it because this is not my idea. Okay. So Trump wants the SEC to change the rule to, instead of doing quarterly earnings, do earnings every 6 months for companies. Now, the interesting thing that I found when reading through this is that actually Jamie Dimon and, which I'm sure you hate, and Warren Buffett, who is someone who I thought would want like fucking daily earnings reports, is like they want this. They've said historically in the past that this would be better for businesses because they can have a longer term outlook on the business instead of trying to make everybody happy every 3 months. And something that I came across that was interesting is that I guess the reporting rules used to be different. They changed it in the 70s to what is now quarterly. And from the late 90s to today, we've seen about half as many companies be public in the US, which the article has attributed to fewer companies IPOing. I think you could also attribute that to like, whatever companies failed, obviously left the market, right? But then new companies just didn't IPO to replace it. And I do think it's interesting from that perspective of if it's stopping companies from coming public, especially as maybe things are slowing down in the US, could kind of make the market look better, that it might kind of can make things look better and kind of keep things going when they're slowing down a little bit. And the only negative thing that I read on this idea was that analysts can't predict earnings as well when they only do earnings every 6 months, which I didn't realize anybody cared about or actually read. So I didn't realize.
Oh, they do.
I know they do, but like they're often wrong. So I wasn't like, I was like, wow, is that really what we're worried about? Like how the analyst views the stock?
The analysts always set the bar underneath where it's going to come, so that it's always up and to the right. They do that all the time.
Because you just made that point. Like you just said that I didn't realize anybody actually read these quarterly reports, and then you're relying entirely on market analysis. So all of these analysts are the ones that are giving you the information that you're actually paying attention to.
It looks like you need Royce's charts more.
Yeah, and
everybody needs
arbitrage. We do this absolutely weekly. So and we're right almost every week.
But my point is these investment houses, they refer just to the charts, but then in the media they put out this story so that it will be below what the charts know it's going to go to. And then they will say, oh, it's a surprise. Look, it's great. It's a lot better than we thought it was going to be, even though the forward guidance that was wrong from the company because they were forced to make it all cheery. Their forward guidance was wrong.
So that means they'll lie to us less, is what I just heard.
That's what I'm saying. Yes.
It sounds like Darin will be happier then.
Why not? I mean, why not? It's a big game anyway, so why even do it anymore? But if these companies are not going,
I think they have to do it, Darin. They got to do something.
You might as well not. These companies are going to go to that are not IPOing. You said
Darin wants monthly,
and they're going private, right? So the reasons you gave, nope. The reasons are because they're not going to be regulated by the SEC if they go private. That's the only reason. They can just get away with whatever they want. All right.
So
that's enough.
So that's partially true. That's to protect the people, right?
It's to protect the company.
No. The regulatory that you have to report is to make sure that people aren't just it's a public offering, which means they're raising money for their company. When you invest in the stock, you're investing in a company. You're giving them, you're supplying part of their liquidity and their cash flow. Right. Which also means when they need to borrow against that, that's why stocks go up and down. They're using that cash flow to fund new projects.
Sure.
So it's not just, it went up because of this and it went down because of this. No, this is a public offering. And basically those quarterly reports, if it's 6 months old, It gives them more time with the money. It gives them more time to correct if they notice that, oh, you know that decision we made in March? Well, it's June. Let's course correct before we get to our next earnings report. So that way we can basically write that off, get rid of that, fix it. So that way every time we report, we have better and better reporting.
Which is fine, and I agree with that.
Constantly auditing them, when do they have time to actually make money and improve the company?
For new companies,
so
sure.
Here's one thing, like, you might be surprised
for new companies.
Well, you might be surprised by this, Darin, but like, if you went to a 6-month or a 1-year model, the discrepancies or all of the things that you think about, like with a bit of transparency, are going to become more obvious because they have to sweep something under the rug in December that's happened over the course of the previous, 365 days. It's going to be way more obvious. So yeah, I mean, you can make the argument that the quarterly reports are in an effort of transparency, but at the same time, those glaring mishaps, or when they need to magically find, $100 million or whatever, those are going to become way more obvious if you go to the 6-month or the year-long reporting.
So you don't think that companies are going to take more risks now because they don't have to worry about the 3-month window? They have a little more time to fix things in a 6-month window if they go risky. I just think
they absolutely will. But it will make those decisions much more obvious.
Yeah. My question is, will they delist any differently? Because typically, because of that quarterly window, every 6 months, if a stock goes under $1 for 180 days, they risk being delisted. If they basically align it with the report, there's a chance that it's like, hey, not only we went off, or if it's adjacent to, you know what, you got a 6-month report, 3 months later, the company no longer is there, and we're able to walk away with and basically tuck tail for what's left and be able to get out of there.
Yeah, I think I'm
playing into Darin, by the way.
No, I know you are, and I'm playing back because that is definitely, they'll change that rule. I know they will. They'll say it's going to be 6 months now, not 3 months. They'll change that along with the other rules, so that they won't be delisted. That'll be 6 months instead of 3.
But that also gives a company a chance to redeem themselves if they've gone horribly wrong.
And at the same time, take more risks. I just think it makes it more of what I thought this whole administration would be, is the wild, wild west cronyism with all the financial people that he's friends with. So I mean, it's
very company friendly, not legislation, but it's a very company friendly policy.
I like that.
Yes.
I like that.
Just don't like the do terrible things to the investor, because when you're trying to, because if you have no forward outlook for the entire year, you're going to have to hold the reactions every 6 months to a year based off because you could miss, if you get a quarter and you miss by 0.5%, that's one thing. If that 0.5% goes 4 times and you miss by 2%, that is a significant number, and the shock and the reaction is going to be significantly gretter.
Can you imagine these biotech companies by the way, we failed 6 months ago. It's down 95%.
We're already in phase 3 and we didn't do any of it. We missed the mark all across the board. Especially for the new companies, yes, I can see that. All right, man. Like I said, the Wild Wild West. I had to get another song in there. That's where I think we're going. All right, so Josh, on a good note.
Oh, thanks.
Not only did you win, you blew it away because you took the top end. And I'll go ahead and pull that. Actually, you know what? No, we got to do the crayons first. We got to talk about.
No. Already. Josh did my crayons for me with that nice chart from Michigan and that interest.
Yeah, you don't want to talk about Tesla though. Nope. You don't want to talk about Tesla.
I wasn't going to talk about Tesla anyway. I was going to talk about MLGO, but that's another story.
Oh, okay. Really?
We will let this go to Josh.
We will tease it. We will tease it for next week then, yes. or whenever we come back. But Josh, you're the winner. by far. What was it was I kept saying Octo, but it wasn't Octo. It's what was it? Josh, the
Yeah, it was. Yeah, it was.
Okay.
What
I
was
thought
it?
it was a different. I kept saying Octo, but it was
OKL.
Okla, OKLA, right?
Yes, thank you.
Yeah. Not Oklahoma, but
Okay,
sort of.
LO. We'll get there eventually.
LO,
Okay.
there we go.
That's where I was to begin with. I was me on a rabbit hole.
Yeah, I kept saying Octo, but it's Oklo.
Mm-hmm.
All right, let's pull that up here.
It's pretty.
And yeah, and then crayons, and there we go. So this, you can see what happened after you can point to where it was that we started this thing.
Go back to Wednesday. There we go. So pretty.
Yeah. It went from 70 to 90, 70 something to 90 something. And
I like it.
Just, yeah,
so
totally
I want to tell
blew
you
out
guys
of the range.
another cool statistic because I like statistics, all right?
Yep.
There have been 4 seasons of After the Bell. Josh has won every week. The 4th week, Josh has won every single one.
That's pretty
So
funny.
I don't know. We shouldn't have let him pick last week. It was just setting him up for
I just got to get warmed up. I see those first 2 weeks get warm up. Yeah.
I think if you look at the scoreboard, he had to pick last week because he won.
No, he did. That's what I'm saying. He won.
Yeah.
That's what I'm saying. We set him up for success.
Right. So the apes are at I'm gonna say apes instead of just what Josh did and what I did. The apes are at 3-9.
Fantastic.
3-1. 3-1. I'm waiting till the second half, like I have lately, to beat Josh.
But that's what it is. Waiting.
Yeah, that's what it is. Just waiting for that.
For
So do you have a? All right, Josh. What you got for us? What are we going to do? Are you ready? Do you have a stock for us?
Don't.
What
was it that Royce was going to do?
You want to see my AI picks for data center?
Yeah, let's do that. Let's do that.
Did you say MKTO or something? What?
Should we do it AMD?
Sure. Let's see if AMD's made the list. Oh, look, AMD is on that list. Ooh.
I know. I watched your webinar.
I like that one. Let's do that.
All right. Let's move on here then to AMD, Advanced Micro Devices.
I love these charts.
Look at that flip.
Ooh, this is a good one.
Right? 4-hour chart is at the bottom. Yes, it is. I love it.
I like it. I love it.
And then for the tiebreaker, let's go take a look at the monthly just to see where it is. Ooh, okay.
And for those of you watching, what we like to do is look at different timelines to validate our thoughts instead of looking at one timeline like a certain ape may have used to do.
We won't name any names, but if you call yourself out.
But it wasn't Josh.
Right?
So we're narrowing it down.
And it was definitely not an 8.
Nope.
To quote Joy Gladstone, cut it out.
You just
have scissors for that.
You were hell bent on getting that one in there, weren't you?
I was. I couldn't let. There was a list, and you look at it and say meow. Yeah.
Meow meow. It's meow meow.
All right, meow.
Meow. All right. So, are we looking at AMD for next week's pick?
Yeah,
that's
I like
what
it.
he said. So we're looking at the daily chart. Daily chart.
It's about a $10 spread, about 154 to 164. What say you, Josh?
You say 154 to 64?
To 164. Yep, $2.50 spread.
This one is so ambiguous. Like that is
Interesting. Okay.
Very interesting.
Very interesting.
Like a one. Actually, I like right where it is.
I love this.
I like right where it is. Honestly, I could see a perfectly lateral move.
Just
So what
hold
would
the
that-
line. Hold. Love it. Okay. All right. So what say you, Josh?
Like right where it is. So what is it? 164, and then that's 10.
164 to 166.50, 166.50 to 168, 168 to 170.50, and then 170.
It's
I thought you said-
I get what he's getting at. Yeah, 158 to 160.50.
I thought you said $10 channel.
Yeah, sorry,
So
$10. I jumped 10.
10.50 or 2.50 each. So it's
Yep.
154 to 156.50, 156.50 to 159, 159 to 161.50, and 161.50 to 164.
Yeah, the
Yeah, sure.
159 to
We can do that.
160.
I hope your math's right, because if it's wrong, I'm coming back after you next week.
You know, but you should know automatically.
And
It's in your head.
statistically, Darin has never won a week 5.
Well, thanks.
That's-
I guess I just.
Is this what you're doing in your downtime?
So
Like,
you have no problems making me second, then, Josh. After that, so
oh, actually, that's a good strategy. Yeah, Darin, why don't you go ahead and go?
what did you decide on though with only the $10 channel? What'd you say?
So 159 to 161.50.
Okay, I got you. All right. Yeah, it's kind of where I want to be.
Just go one below if you're like.
That's no, I know I wasn't gonna go all the way up. I just I can't see it continuing up, but yeah, I'm gonna go the one below. 156 to 159.50.
All right. Well,
I mean 150, 156.50 to 159.
now the quants have the bookends.
Yep. Who you picking next, Daniel or Royce?
Let's go, Daniel.
What?
Ah, pressure.
Love it.
Dun, dun,
All
dun,
right,
dun,
so
dun,
we're
dun.
doing this. We're doing the spread trade. So what? I either get the top or the bottom.
You're just doing the straddle.
Yep.
Or the straddle would be the middle.
Oh,
Yeah, come on, apes, get it together. No.
Trust
By
me, I remember
definition, I
that
feel
from
like
my
straddle
Series
is-
3 test.
I feel like the
You've
straddle
been
is one of
hanging out
each
with
end.
that ape. You ape adjacent.
Straddle is the options where you want it to stay in the middle and spread.
By
is
taking the
spread out.
inside of the
So
outside.
wait. So the upper range and the lower range are the only options.
Yeah.
Yep, 156.50 or below, or 161.50 or above, and
I'll
above.
do upper because I'm bullish.
Of course.
Excellent.
Did we fall into your trap, Royce? Even going last?
Yes. My target actually on my charts is 147. So we'll see where we are
Dang.
next week.
Wait,
How does he do this?
147?
How does he do this?
Because there's only so far it can move in a week statistically, and that's what I base our numbers on. But the goal, long-term goal, where support is about 147.
Not only that, but he just did all the analysis Sunday.
Right? I'm like, if you had watched my analysis, you would have heard these numbers before.
We had the answers if we had watched.
We didn't do our homework.
Yeah. He knew
Take
that
our
Josh was
pickings,
going to
there's
say,
gonna be a test.
that's right. Yeah, win or lose. All right. All right, guys, let's get out of here. Let's go enjoy our lives. Let's see what the world is going to do between now and next Wednesday, because I don't know. And
You're
happy
still
cutting.
waiting for the world to change.
Happy cutting.
Oh,
Waiting
cut
on-
the grass.
Sing it. All right.
All right.
Bye.
Later, guys.